All right, so we are going to be breaking down the trade that presented itself. Well, we're going to be breaking down the delivery that we saw today at 8 a.m., around 8 a.m. to 9 a.m. And I firstly want to head into the higher time frames, but this was the trade that was taken. SMR formed at 8:51, previous candle low, or the previous low before that was at 8:49. It's important, but let's go back to the higher time frame. So whenever we are looking for any setups, you have to see what the higher time frame is doing. And if you don't know what the higher time frame is doing, there's no reason, by no means at all, should you be heading into the lower time frames to look for any trades. So this right here is the daily chart of the Nasdaq, and what we can see is that on the 30th of October we formed a high. We formed another high on the 3rd of November, and we formed an SMT on the 12th of November. ES swept the high that was formed on the 5th, creating a SIBI here on the 4th, while NQ did not tap above that. So that caused this entire rejection to sweep the new week opening gap that was created on that Friday that dumped 1,200 points. And once this got swept, you see that we swept it on the 20th, but you see that the 21st of November opened low, and then we started a buy program to the upside. But the node that established this was on the 21st of November. But what I want you guys to pay attention to is the delivery in comparison to all the indices together. So this chart right here shows all of the indices and how they delivered. You can see that ES swept this low as NQ did right here. As you can see, we swept this low, and then we also started the buy program on the 21st. However, on YM, or the Dow, you see that these lows were kept intact. The Friday, October 10th low, and the 17th of October low. You see that there. 17th of October is also a node because it's 1 plus 7 plus 1, because October is 10. It's important. So we see that a weekly and a monthly SMT is established between NQ and the Dow, and there is another SMT that was present here. I'm pretty sure it was on the hourly chart between the Nasdaq and the Dow that started the next expansion upwards. I'm pretty sure it was around this time. It was 4 a.m., 9 a.m., the 24th, 9 a.m. Yeah, you can see that 9 a.m. candle stayed above here. So there was double SMT, one at the lows monthly, and then another SMT here. Not only that, but SMTs at these lows. You see that the low of the Nasdaq was formed at 5 p.m. or 5 a.m. here. Let me just show you. Formed at 5 a.m. here. On ES, it was formed at 5 a.m. The low here was formed at 6 p.m. on the 20th, while this is the 21st of November. So that's also important to take note of. So once there's double SMT between the daily and the hourly here, that's double SMT, and that's all you need for a run higher. So now when we take a look at so once we have that established, what we want to look for is to see a change in the state of delivery, which you can see that this was another high that was formed here, and you see that we displaced above it, drop back down below it, and this candle that happened at 11 confirms that the CST is intact, because we ran up, displaced below, we closed below this bodies here, and what do you see? Price pulls to the upside, breaking above this BC that was formed at 15, which is 3 p.m. What do we see? 12 sets up an order block there. 13, which is 1 p.m. opens, comes down into this BC, taps it, we start to rally to the upside. So now that we are seeing the bias flip from bullish to bearish, we see that this is the sell side of the curve, buy side of the curve. You see that? This is the curve that we're looking at in order to see the market maker model play out. So this is on the higher time frames. On the lower time frames here, what we want to look for is just market maker buy models, because this is a bigger fractal, but on the smaller fractals, this right here is a market maker buy model. This right here is a market maker buy model. This right here is a market maker buy model. every single retracement, expansion, retracement, reversal that you should be looking for should be a buy program. Although there are circumstances where you can look for shorts in a buy program, that's very special cases. It usually happens when there's an SMT on the higher time frames paired with another SMT on the smaller time frames that can confirm that the order flow on the smaller time frames are changing. When you see a bigger fractal market maker model forming, you want to stay in line with that bigger fractal, because on the smaller time frames, you're just going to see market maker buy model here, market maker buy model here in this little consolidation that you see here, market maker buy model here, and it's just rinses and repeats. Look at this little consolidation, manipulation there, back to the highs, consolidation, manipulation, back to the highs, manipulation, back to the highs. So now if we take a closer look at the hourly chart, what we can see here, let me actually do something real quick so this can just look better for you. So this is the delivery that took place this week. So you see this fair value gap here is the daily fair value gap that was formed on the 13th of November. It was actually a SIBI that was formed on the 13th of November. So when we take a look at the hourly time frame, this is an important area to monitor here. This is it's an alarm that I set. But when we take a look at this delivery, you see that we formed a low at 12 a.m. on the 1st of December, and we start a buy program here. You see that we form another low at 9. We keep this 12 a.m. low intact, also tapping into this continuation model from the previous day, and then that's when we start to see a rally. We get above this CB that was formed here. So actually make it look easier. This is CB. The low gets tapped. We start to expand. We close above the 50%. We tap it, respect it, head back up. We tap the high, head lower. We're respecting the 50%. Get below it, manipulate here. Some form of SMT gets formed. No doubt in my mind. Let's see. Some sort of SMT gets formed there. And what we see is another buy program come into play. And once we close above it, what do we see? That the bodies are respecting the top of this PD array, which we saw that the top of this PD array was getting rejected here. It got rejected at the 6 p.m. open on Sunday. It got rejected on the 12 o'clock candle on December 1st. And then you see that once we got above it, we got a retracement at 11 o'clock a.m. and you see that we respect it here, and then we start buying it up again. So what I'm looking at here is I want to see if we get any retracements here. I want to see this used as support. And what do you see? This retracement that occurred on the 2nd of December was not on the 2nd, on the 3rd. This retracement that you see here, on ES, we swept this low. And we also respected the high of this PD array, this BC that was formed here. So this entire model here is a market maker buy model. You see original consolidation, right? This is the consolidation that takes place. Right, you see that? Original consolidation, we get that manipulation lower. We form an SMT here, and then we get that retracement. Right, that's the reversal that takes place. So this candle, this wick here, that was formed at 9 a.m., that's important, is a rejection block of this market maker model. So what I'm looking at here in this Thursday delivery is to see how we're going to respect this high of this PD array, and then what's going to happen once we reach into this rejection block. So Thursday opens, we see a high form, and then we start to displace lower. We form a low here, head up higher, and then reject the low of the continuation model of this 10 o'clock candle. And we retrace back at 2 p.m. into the rejection block. And what do you see? The top of the wick, the close of the 9 a.m. candle, what happens? We bounce. Not only that, but we tap the low, or the high of the CB that was formed on the 13th of November. So once I see this, how we tap exactly, so you can see it's not BS, we tap exactly the high of that SIBI. What IPTA, interbank price delivery algorithm, what it's telling me is that this PD array has been finished. We've used it as a staircase, as a low, 50% high. Once we get above it, we respect it, respect it. Once I see this should not get tapped into. This CB that was formed should not get tapped into again. So then what happens here? These are market maker models on market maker models. So this left side of the curve here is another market maker buy model. So when you understand that, what you can do is see when the low got formed. So this was the 2 o'clock candle. This wick, this entire wick is the rejection block of this buy program, of this market maker buy model here that you see, which is the curves that I have there. You see original consolidation, low, then we start to displace upwards. So when today opens up and I see in the morning that we consolidated throughout the entire Asia session, well, not Asia session, the London session, when London opens and we see this consolidation here, I wait for AM1 and starts at 7:30, ends at, or 7, starts at 7, ends at 8:30. What I see is that 7:30 manipulates higher, if you're looking at another 1 minute, manipulates higher as soon as it opens, forms a high at what time? 7:02. That's where we can come into this. We see that the entire London session is just a consolidation here, right? AM1 opens, we manipulate above this high, taking out the liquidity resting above the third 90-minute cycle in the London session, right here. And we form a high at 7:02. Price then begins to spool to the downside, although it's still consolidating here. And when AM2 opens, which is at 8:30, what do we see? Fast displacement to the downside. So as I'm seeing this, I'm thinking to myself, we're in a higher time frame buy program. Yesterday, a buy model got completed, and overnight, there was a continuation model, which usually runs for 200 points higher. But you can see that we started this continuation model. This is the 10 o'clock candle, this range here. This rectangle, you see the low, the 50% and the high. That is the rectangle that is signifying the 10 o'clock candle from this day. Or, hold on, let me go back to it so you can see. Not sure if you can see it or not. Not sure if you can see it. It's right here. This 15 o'clock candle from actually Wednesday. So this is the continuation model from this 15 o'clock. Pretty much the 3 p.m. candle from the other day. So when you come look at this delivery here, right, what you see is AM1 consolidates still, although we're displacing to the downside a bit. We see that a high got formed at 7:02. The high that was formed here was formed at 5:12. The high that was formed here was 4:05. The high that was formed here was 3:50. The high that was formed here was, if you can understand what I'm trying to say here, the high that was formed here was 3:21. If you can understand what I'm saying there, you see that as soon as the AM2 cycle opens, the 90-minute cycle, you see that fast displacement running to the downside. What I'm seeing this as is manipulation to the downside. What I'm looking at specifically on the higher time frame, which is pretty much the most important part, is if we go back to the hourly time frame, we come over here. During this 8 a.m. candle, as we're displacing to the downside, we see that NQ taps this rejection block. Now, what I want you to do is compare not only the range that was formed from here to here, right? Because this was a range prior to this 9 o'clock candle. This is the 9 o'clock candle. This is the 8 o'clock. In real time, at 8 a.m., I was looking at only this candle. The candle was around here. I was looking to see. I divided this range that was formed here from buy program that was seen on Thursday, the difference between where NQ is and where ES is. And if NQ is going to tap this rejection block and ES doesn't. So as you can see here, ES stayed higher in the range than NQ did. NQ got all the way below pretty much the 50% of the 50 to the 75. It got below it. But ES, as you can see here, stayed above it. As you can see that. Kind of looks messy, so I'm just going to take this off. But you can see that NQ manipulated lower than ES, and we tapped this rejection block on NQ while on ES we failed to. And this purple rectangle you see here is a new day opening gap, which we respected. So when you go back to the delivery here, this low that was formed here was it tapping into this rejection block. Let me show you. You see how we're tapping this rejection block? We're staying in the proximity while ES stays above. ES never tapped it. That's exactly what I want to see. Those are the algorithmic signatures that are telling you that price is going to start to reverse. So now what I'm looking at is time. What you can see here is that the 842 to 915 macro opened. And that validates our time of interest because as we're seeing the manipulation take place, okay, I can't find it. As we're seeing the manipulation take place, we're also seeing that the time of interest is pretty much here. So you see the 842 to 915 macro open right here. You see that 842 displaced lower, forming a SIBI. That is a future inverse fair value gap. We see that 845 displaced lower, creating another SIBI, creating another future inverse fair value gap. And we see that 848 formed a low. That low was then swept at 851, was purged. And from 851, what do you see? Price starts to spool to the upside. So once we see that this 845 candle gets tapped into, I want to see the reactions to this. If I see that 845 gets displaced through it, well, if we see that 845 SIBI get displaced through, that's my entry. So you see, as soon as the 845 candle, 845 SIBI got displaced through, I enter my longs. We see that price closed in proximity of the 842 SIBI. I had another long at 856. And what you see is that price then comes down lower to, hold on, because I was trading this on a 15-second time frame. So this is what I was looking at, because you're seeing annotations that are probably not on your chart. So this was a BISC that was formed at 854.15. I wanted to see price respect it, and as you can see, we started coming below. We closed below it, but then we quickly repriced above it, came back below. That's another entry here. You see the price starts to spool as soon as the 9 o'clock candle opens. So what this is telling me is that IPTA is in a rush to start spooling to the upside. What we see then is that the 842 SIBI gets tapped into again. We close in proximity of it. We tap the low, respect it, tap the 50%. Take a look at this. It happens in every single time frame. Every single time frame. We tap the low of the 842 candle, or the 842 SIBI. What happens? Respect it. And 901. We displace above it. Come tap to 50%. What happens? Respect it. Displace above it. We start tapping the high. Respect it. Tap it again. Respect it. Go higher. We tap it again. Finally, at what time? 906. When the time is right for IPTA to spool, and this PD array has been getting tapped into at the right times. 903. 906. It's using this as a staircase. That's that's pretty much how the algorithm delivers itself. That's when you start to see the displacement to the upside. So once I started to see this right here, I pretty much knew that this was the SMR here. We were in the time of interest. I was seeing confirmations, key algorithmic signatures that were just confirming this. And by the way, this annotation that I have here is a breaker that was formed at 836.30 on the 15-second time frame. You see that I have it drawn. We came here, consolidated at the 50 level, random level to consolidate at. we had a consolidation, come sweep, the low that was formed at 914, sweep it at 919, come back above it, we start respecting the breaker, come back below it, sweep more liquidity, and then that is when we start displacing at 925. 925 is usually a volatile candle when market is opening. So by the time I saw this movement, once I saw the 9 o'clock candle start displacing to the upside, I waited for this BISI that I have outlined from a, I'm pretty sure it's, I can't remember what time frame this is. I'm pretty sure it's a 1 hour time frame BISI. Once I saw that that got displaced through and we started respecting this BC that was formed at 908, I moved my stop to below the 50% of this 940 or 845 candle, the 845 city, because price should never be reaching into this. And as you can see, 930 opens and we were just in a rush to get to that final target, which was resting at 755, and that was pretty much the trade right there, done. So yeah, I mean, as you start looking for these algorithmic signatures, you're gonna start to be able to read this like a book. And when I tell you there's no better feeling, there's no better feeling. Because the amount of work that you put into trying to understand what's going on and not understanding, to then finally seeing what's happening behind the scenes, there's no better feeling. There isn't. There isn't. But the only way to get there is by putting in the work. That's it. Because that's when you'll get the light bulb moments. The light bulb moments are when you put in the work, no other time. So I hope this delivery was kind of gave you an insight of why I was thinking the way I was thinking in today's delivery. But yeah, I hope you enjoyed it. Stay safe. Have a good one.